So in this video, this is a video series. So we're going to talk about uh, the digital payments with blockchain, on how blockchain can be the catalyst that shapes the future of money, how we use it, and how it can potentially disrupt the payment system. So in this video series, we're going to share about CBDC, central bank digital currency, stablecoin, and also deposit tokens. Alright, so in this video specifically, I'm going to share to you about CBDC, on how it's being designed, on the use case of each jurisdiction have launched it, what are their verdict, and then also the the conclusion or the observation of what we come to know about CBDC. So all this will be my personal opinion, my personal observation on how it's being designed. I'm going to share to you at the end of the video. All right. So let's dive deeper about why we introduced this research, because we want to know about what are the future of payments going to be, and we need to anticipate it. We need to prepare on how the future of payments going to be. So in this case, we already seen the QR payments, the interbank transfer have enabled near to real-time payment settlement, where you can receive it instantaneously. Previously, it takes about T+2 for you to transfer, for you to receive the expected transactions that you should be. So with QR payment and also interbank transfer, we also see the blockchain has led to the creation of stablecoins, CBDC, and also tokenized deposits. And then when it comes to stablecoins, we also see that they have led to various kind of designs, like collateralized stablecoin, uncollateralized, and also over collateralized. So we need to touch more about it, the next one. And then we also see that most of the stablecoins also uh, fail, such as the Terra Luna fiasco, but stablecoin still remain relevant today, where the market cap of stablecoin reached about 155 billion in early 2022, and then some of them also, like institutional players, also like JP Morgan, ENZ Bank, have introduced their respective payment tokens. So why do all these market players, the initial pioneers and so on, introduce um, the payment tokens through blockchain? First, because it can improve the efficiency of payments, reduce cost of cross-border transactions. Third, reduce counterparty risk, and fourth, most importantly, is the immutable record. So which means that every payment that you conduct is recorded on the ledger, and then it cannot be edited, it cannot be manipulated. All right. So let's briefly touch about the history of payments. We also see that the coins are being introduced in 1100 BC, and then in the 11th century we also see that Song Dynasty introduced first paper money issued, and then all these payment instrument like check, credit card has been still relevant to this day, and then also the electronic banking services. Let's talk about the in 1990s, which is the world's first CBDC by Bank of Finland, which is called Avant. So Avant worked similarly like credit card and also debit card, but with Avant it works like the today's technology, which is the prepaid card, like Transwise, like all other e-wallet provider that you may come across to. So you need to reload, and And the way that you to reload in the 1990s, you go to the merchant store, to the convenience store. You can top up through through your telecommunication provider. But in the initial phase, it is non-reloadable card. So which means that once used, let's just say you get the $50 non-reloadable card. Once used, you have to dispose it. But the second phase, they relaunched uh, the reloadable card. Okay, and then we'll talk about 10 years ago, or 9 years ago to be precise. In 2014, Apple Pay was introduced. So now many countries have enabled it. Uh, in Malaysia, it was introduced last year. Uh, in 2020, WhatsApp Pay was introduced under the integration of UPI, Unified Payment Interface. It is only available in India, so which means that with WhatsApp Pay you can do a peer-to-peer transactions. So you can send to your parents, to your siblings, and so on through WhatsApp Pay. And in June last year, or June 2022, Japan passed a bill to regulate stablecoins. So all these have led to a significant developments, significant innovation, where we see stablecoins also part of the history of payments. Right? Okay, so let's talk about CBDC. It is one of the quite controversial, quite unwelcome payment instrument by the public, I would say. And also there's a need for all the central bank to prepare when it comes to deploying this in public. Okay, so we also see that about 90% of world central banks have tapped into CBDC. Most of them have gone pilot or development phase, research, and so on, and only about 12 countries have gone live. But if you wish to look further about which of the countries that have gone live, you can click here. Right, I'm going to share to you the slides at the end of the video series. All right, so in this slide, we notice that there are 4 countries that have launched, but obviously this is non-exhaustive lists, which are Jamaica, Nigeria, Bahamas, and also Cambodia. But for Cambodia, they consider themselves as not a CBDC because they are not running on blockchain. The same goes to China actually. So China is not really running on blockchain, but it works similarly like blockchain because when it comes to blockchain, right? When it comes to CBDC, it is not commonly defined. So each of the jurisdiction have their say about what is CBDC and what is not. But we're going to share that what we can concur that CBDC is e-cash or e-money that is substituting the instrument of physical cash. All right. So why they introduce this CBDC? Firstly, it can streamline the current payment system. So when it comes to conduct the delivery versus payment, especially when it comes to capital market settlement system, the current infrastructure of payment system is that it is T+2, so which means that transaction plus 2 working days. So with blockchain, it can realize the potential of to unlock the T+0, so which means that once you buy bonds or stocks, you can receive it within this trading day. All right. So second, it can potentially enable financial inclusion. So which means that underbanked and also unbanked individuals can participate in the digitalization. And then with all this, right, why they introduce the blockchain and also CBDC? It is because public sector also have to keep up with the innovation, have to keep up with whatever the emerging technologies are, which means that they have to realize of applying adapt and adopt mentality. So fourth would be the reduced counterparty risk. With blockchain, we also see that the public nature of blockchain, the data is immutable. It cannot be edited. It cannot be manipulated. So this is one of the positive development or positive indication why certain central banks tap into CBDC. All right. So let's understand about the taxonomy of CBDC, how CBDC can be designed, because as you may all know, that CBDC can come in different shape and sizes. So we need to talk about the two distinguished design, which is retail and also wholesale. So retail, it is open to all, including non-institutional players, so which means that household retail players, merchants, and so on can access to the CBDC tokens. And with that, it comes central bank also have the direct liquidity and also providing the access to save money with 24/7 availability to provide the near real-time payment settlement. All right. For wholesale CBDC, it is primarily used for interbank transfers, which is only for large-scale transactions, and also for trading, money market funds, settlement, which is PVP, payment versus payment, and also capital markets settlement, which is delivery versus payment. And most of the wholesale CBDC that conducted through experiment, through pilot project, they see this as a positive development for wholesale CBDC, as it can unlock the T+0, as what I mentioned earlier. And then we touch further about the retail CBDC. It can be designed in three different models, which are direct model, intermediary, and hybrid. So in hybrid model, it is issued to the directly to the end customers, so which means that central bank will pass it to the individuals and also merchants and so on directly without having the commercial banks. So what does it mean? It means that it can disrupt the current financial system, and the way the current financial system works is that the commercial banks are the distributor of money between central bank and also individuals to merchants. All right. With direct model, central banks also have the responsibility to facilitate the client onboarding, KYC, and also custom service. So the current system is that central bank do not have the experience, the expertise to facilitate all this client onboarding, KYC, and also custom service. It may take years to prepare for it. But for intermediate model, this is the same model as what we are today, where the commercial banks will issue the central bank money, and then after that they will facilitate the responsibilities, or they are the moderator of to conduct the customer onboarding, KYC compliance, and so on. And this is the current infrastructure that we see. And then for hybrid model, they see that it is to segregate the risk of the CBDC holdings of the end user. So which means that the CBDC holdings that you hold on the commercial bank, it is not reflected entirely of the bank's balance sheet. So this comes a benefit. So which means that in the event of a bank run, a commercial bank will likely to hold the withdrawal. So which means that those customers that impacted by the bank run, they may likely not able to withdraw. But with the hybrid model of CBDC, it can transfer the risk of the customers of the CBDC holdings can be transferred to another bank, right? When it comes to the financial distress. And then with all these models, there are several design that you can consider, which are token-based CBDC and then also account-based CBDC. So what are the difference between them? All right, so token-based, it is like a cash, physical cash, but 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 when it comes to token-based, any accounts can be many accounts can be created, and then when it comes to many accounts can be created, the compliance regulations, the compliance needs and so on cannot be met, cannot be matched and so on. So, but with account-based CBDC, the CBDC will facilitate the account holding. So each of the user will have their own CBDC account, and then each of the CBDC account has their own specific balance. So which means that you and I cannot create multiple accounts of the wallet or whatever that they may refer to. And then with this account base, most of the jurisdiction that launch it, the CBDC, the central bank will launch the CBDC app, and then you need to link to your commercial bank account to top up the CBDC token value, whichever that you want to top up with. So all this comes with pro and cons. All right. So let's talk about the pro and cons about it when it comes to designing the CBDC. All right. So firstly, when it comes to CBDC, most of the players can see this as a huge downside. So which means that it can alter the financial relationships. It can make the commercial bank to be redundant, right? Commercial banks will need to compete with the central bank. All right. So let's talk about the positive side. So firstly, it can ease the monetary transactions. So for example, when you pay tax and so on, it can be convenient. And then second, it can airdrop to targeted individuals or groups. So what does it mean by airdrop? So airdrop means that the government, the central bank, can distribute the money to the individuals that are impacted by certain unfortunate events like flood, like earthquake, and so on. And then those who are living, that are registered within this certain vicinity of area that are impacted by this natural disaster and so on, they can pass it directly to the victims or the targeted individuals directly without having to claim directly and so on. And then they can use it for specific items and so on. All right. That would be improving the payment system efficiency, especially when it comes to the wholesale transactions and also cross-border payments. And then fourth, it is also the safe alternative to commercial bank money when it comes to bank runs. Okay, let's talk about the downside. It is a threat to commercial banks, especially when it comes to the direct model. And then second, the deposit of commercial banks will be slim if CBDC introducing the interest-bearing capacity. So which means that if you store all your money in CBDC, and let's just say a central bank may introduce interest rate that could be competing with these commercial banks, there's a competition for it to compete between the commercial bank and also central bank. And then third, it is one of the most important factor to consider, which can be a loss of privacy and confidentiality. So which means that all your transactions will be monitored by the central bank, and all your transactions, depending on how it is being designed, but when it comes to public blockchain, anyone can see what you spend on, It can also be used as a targeted advertising and loss of financial privacy, um, data, and so on. So this is one of the factors that need to consider when it comes to this, to design the CBDC. Alright. Alright, let's talk about how CBDC has been designed in various jurisdictions. So firstly, we'll talk about the Nigeria and also Bahamas. So Bahamas and also Nigeria, they implement the account-based model with two different distribution. First, with this, they separate themselves basic tier and also higher level than the basic tier. So basic tier, they do not require a bank account, and when they can receive and transfer and also hold the certain balance on this CBDC app, but it comes with certain account balance limit. All right. So with higher tier, as you go with higher tier, then you need to have the local bank account integration for you to connect to the CBDC. But with that also, it still have a balance limit for individuals. All right. So second, we'll talk about Indonesia and also Kazakhstan. For Indonesia, they're still in the research phase. For Kazakhstan, they conducted the pilot project to implement a token-based model and with a two-tier distribution. So, which means that the commercial banks and also the fintechs will serve as the main contact of KYC and also user boarding. But also, this comes with a risk of the not able to meet certain the compliance and also the AML needs. All right, but for third, this is what Sweden script the project, but China right now, China PRC implement the dual tier approach. So which means that the central bank will provide the digital token and provide the payment infrastructure, but the front end, the digital wallet, will be maintained by commercial banks, and then the commercial banks will maintain the CBDC wallet in parallel with their interest-bearing accounts. But all this design, like Bahamas, Nigeria, Kazakhstan, also China PRC, they do not implement interest-bearing capacity. Should uh, should future jurisdiction implement this about the interest-bearing capacity, it may likely to disrupt their financial order or the financial current model. All right. Okay. Let's talk about the projects that have been gone pilot. All right. But this one will be touched specifically on CBDC. So so firstly, we'll talk about Project Ubin. So Project Ubin was a 5-year project, and they also participate. Bank of Canada also participate in this Project Ubin. So just to give you context, it was a 5-year project, and it was initiated by MAS, Monetary Authority of Singapore, and they cover mostly on delivery versus payment, cross-border uh, payment versus payment, the money market funds, the settlement, and also trying to explore on the new ways of real-time growth settlement system, real-time growth settlements. And what they in this project will be, they concluded that they see the commercial applicability, viability, and also the benefits of blockchain technology beyond capital markets and also trade finance. All right, and let's talk about Bank of Thailand. They use it to test the efficiency of bond sale process, and then for Project Atom, they use it to find way on how to do repayment of syndicated loan. All right, they managed to see that it could really see this as efficiency gains, and reduce the operational risk by using the syndicated loan mostly involved with highly manual and also paper-based process. All right. And then for Project Aber, they they conducted three use cases, which are payments between central bank, domestic payments between the commercial banks themselves, and also cross-border payments between the commercial banks within the within the UAE and also Saudi. All right. So, and then also currently, Project Garuda, they are trying to find out about the security settlement, which is the delivery versus payment, interbank fund transfer, and also interbank money market funds. They're still currently in research, but most of it, the one that I already concluded right now, they see the positive about the practicality of blockchain technology to use for for capital market, trade finance, and also other applicable use cases that could really improve the, the process. All right. Let's talk about retail CBDC. So retail CBDC, most of it they see this as so because the current infrastructure right now with QR payment, it really provides the near real time payment settlement. They see this as not a massive need for the retail to be deployed. So right now the Monetary Authority of Singapore (MAS) they conducted a project ORCID, but mostly they don't see as a direct need to introduce a retail CBDC. It's not compelling. Okay, this is one of this is remarked by the former MAS chairman, which is right now the Singapore's president, Tharman, Mr. Tharman. All right. So Project ORCID, the use case right now is government vouchers and also person to government. So government vouchers, they touch based on the government voucher scheme, tax relief, and also some of the tax incentive, which is the some of the trainings that for you to attend and so on. All right. And then for digital rupee, so this one is launched by India, by Indian government. They do on the real-time payment system like the digital money, where they do peer-to-peer transactions and also peer-to merchant transactions. So which means that you pay your food, pay your debts to whoever you owe to, like your friends and so on. You can use it with the digital rupee. Same goes also with CBDC of SCB by Thailand. But for Thailand, they partner up with Siam Commercial Bank, where they launch a CBDC QR code payment also. All right. And then for e-peso, which is launched by Uruguay, they conducted the same thing as what digital rupee of India and also CBDC of Thailand are doing, but they launch it in a token-based issuance. And what they said is that their remark is that CBDC choice should be based not only on technical considerations but also cultural dimensions of the use of money. So this is an interesting case study, right? So let's move on with other developments that about the CBDC. All right. So the views of regulators of CBDC is that Singapore see this as not compelling due to the current electronic payments in the city-state have become seamless, pervasive, and also efficient. And then for South Korea, they see this as a limitation, especially when it comes to processing the transaction during the peak times, especially during the lunchtime of during the weekday, or during the time of peak period of holidays and so on. This can be seen as a limitation. All right. And then for France, they see this as our means of payment must remain a partnership between the central bank money and also commercial bank money. All right. And then let's take a look on the the CBDC they have launched publicly. But for East and Y, they only launched in various cities. But we can see that transactions of this East and Y have reached almost 250 billion at the end of June 2023, with a jump of over 100 billion yen as of August 2022. But we can see that there's a positive development of ECNY because uh, almost because it has reached almost close to 120 million wallets being registered. So which means that there are about 120 million individuals, merchants, companies who that registered, and then they plan to launch a SIM card that accept offline NFC payment features with the CBDC enable. So this is one of the dilemma or the problem that that CBDC are facing, which is the offline payment. All right, let's talk about the Jamaican and also e-Naira. Uh, they aren't able to get to garner certain numbers that they expected. But for Nigeria, the launch in 2021, close to already reached to 2 years already, with only up to 860 users sign up during that particular period. But in early 2023, the Central Bank of Nigeria managed to garner up to more than 13 million users. And this is because they impose ATM cash withdrawal limits and also introduce NFC payments feature. The way that I see it, for why I see it as a low adoption or negative outlook, because they had to impose some rules, some of the unfriendly feature that had to get all these citizens, the merchants, to force it out to use the e-Naira. All right. And then for Jamaica DEX, they launched it early this year, February 2023. It can only garner about close to 200,000 users, and then only reach about 350 million Jamaica dollars. And this is the reason why they face this issue, because they faced limited merchant adoption. All right. So they had to combat this, which is they introduced some incentives to sign up for the merchants, and I hope that it sees some positive development in the Jamaican DEX space. All right. So what we see for the concluding remarks is that blockchain and Bitcoin have led to the emergence of new form of money, the way that we see it. All right. It can share positive sides, but also can share greater risk as well. So firstly, it may resolve the transactions between individual and governments. Second, it can lower the cost of fees, especially cross-border payments. And then third, it may also promote some financial inclusion initiatives. All right. Okay. However, there are some risks that needs to be addressed, which are technology risks. All right. The second is single point of failure is also can be expected. Third is the privacy and consumer protection is a huge problem. So in the event that the CBDC is designed as a public blockchain, any individuals can be traced, can be known whatever the financial activity used, and it can be targeted advertising. So all these companies, private companies, may advertise according to your financial activity, which is already which has been known to the public. All right. So this is it. This is about CBDC. I hope that that all this insight can gain you some knowledge about how CBDC works, why there's a need for CBDC, and then also why there should not be a CBDC also. So in the next topic, we're going to touch base about stablecoin, and then after that we'll touch about what's deposit token. Alright, please contact me or drop a comment below if you have any further questions about CBDC, and also stablecoins or whatever you have questions about. And then at the end of the video, or the end of the series, I'll share to you about the slides. I'll share the slides to you, the full slides in the PDF format. Alright? Okay, see you guys soon in the next video. Bye bye, take care.